All right, moving on, let's shift focus to earnings. Eternal shares end higher in trade despite miss on profit after tax and margins front. The Dipinder Goyal-led company reported a 90% drop in quarterly earnings to 25 crore, and that is compared to last year. My colleague Snehvi joins with more numbers.
Yes, good morning. So if you take a look at Eternal's Q1 numbers, we would say there was a strong set coming in on the back of segmental performance, but operationally on the main four metrics, only revenue is a beat versus estimates. Other than that, PAT, EBITDA and EBITDA margin are all a miss. Now, why we say that despite segmentally it's been a strong show coming in from Eternal, and what are the top reasons that we've liked from the performance this far? Because overall B2C business NOV, which is the net order value, is up 55% on a year-on-year basis. Food delivery average metric, average monthly transacting users have seen a big spike of 2 million users just on a sequential basis, so very sharp uptick over there as well. Quick commerce, Blinkit has shown this time across all the other segments. Quick commerce revenue has beat estimates, GMV has beat our estimates. Quick commerce EBITDA and adjusted EBITDA losses have reduced. Now mind you, this is something the street was not expecting at all. We were expecting very flat moves over here, but the loss reducing is a big positive coming in from Blinkit, and the quick commerce average monthly transacting users have also seen a very sharp uptick. Other than that, Hyperpure revenues have also beat our expectations, and most upbeat is management commentary on food delivery, wherein on one hand, yes, they have cut their guidance from 20% to 15% in the near-term margins, but they also say that they expect the margin expansion to go ahead. For a Blinkit as well, the numbers are expected to get better from here in terms of margins, because the store that they have opened 12 months ago will start maturing. They've also added around 243 net stores in Q1, taking the total store count to 1544. Now, while all of this looks good, let's understand what brokerages are making of this. You have target hikes coming in. While the stances have been maintained, target hikes coming in from Morgan Stanley, Goldman Sachs, CLSA, JP Morgan, Nuvama, as well as Elara. The highest target coming in from CLSA, wherein they've hiked the target price to 385 from 375. So watch out for Eternal in today's trade.
That's right. Thanks, Snehvi, for taking us through the fine print of Eternal's numbers and also what different segments have done and what brokerages are making of it. But now let's also take it to Eternal's management and see what they have to say about the company's results and the outlook going forward.
Well, Sajin, I think quick commerce has definitely been a headwind to some extent for the food delivery business, because I think some of that consumption has also moved to quick commerce, right? But having said that, I think we still believe from a penetration standpoint and opportunity standpoint, we still do think that long term the business can grow at 20%, although that visibility is not there for the near term at this point. But I think there's enough going for us to be excited about the business. And I think if we do well and we are able to innovate and unlock more use cases for food delivery on the app, then I think we get those 20% growth levels again. If you look at it on year-on-year basis, right? So I think quarter-on-quarter, yes, it can appear to be lumpy, but if you look at it more longer term, I don't think there is any divergent trend there, and we expect that MTC growth to continue along with NOV growth. AOV growth, which should continue driving the growth of the overall business going forward, like it has in the past. And I think the assessment is right. That's what we expect. I think in that time frame, we should be able to move most of our business to inventory ownership, and the margin accretion should also happen in that time frame. The growth momentum remains strong, and at least for the next 2 years, we feel that the growth rates will be high as we still are building out more infrastructure, and getting to 3,000 stores will take time.
All right.